Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. In today's video, we are looking at Home Depot. But before we do that, please like the videos, subscribe to the channel, let me know if you have any questions. Join us also on the Discord by obviously signing up for the Patreon account. Thanks to everybody who joined us so far. Hopefully we can build a community of like-minded people that want to share their journey and so on. So please let me know, inshallah, if you have any questions regarding that. But for now, let's start with the stock. Home Depot is one of the companies that I've had in my portfolio for a long time. It's down quite a bit in the last basically month or so because of the overall market, but at the same time the company reported the earnings and it went down about 6% I think on the day they reported. So I want to see if it's actually a buy or sell or hold for now, and I'll tell you exactly what I'm going to do moving forward. So in terms of earnings, they reported the EPS side of things, they just beat. Revenue was down and comparable sales were actually slightly down, and for that reason the stock went down I think about almost 6% on that day. But at the same time, what they've done is what they've done for a very long time. They given us more, almost 10%, over 10%, basically over 10%. I can't even read these days. Just 10% increase this year, which is absolutely amazing. This is a company that has increased, I think, 18% for the last 5 years or so. They are increasing that basically by 10%, which is absolutely amazing. So this is the type of company I like to own, but we now need to see from basically financial side of things if this company is a buy or hold and so on. Okay, right, for those who don't know, Home Depot, this is home improvement retailer that basically sells to normal do-it-yourself kind of customers as well as professionals. They're in the same industry as Lowe's, which is a company that I used to own in my portfolio. They currently trading $297 per share. Their year-to-date performance is actually down almost about 6%, but 5-year return is about 65%. So if you had this company in your portfolio last 5 years, you would have seen basically 65% return on your money. EPS is $16.69 and market cap of $301 billion, almost $302 billion. It has a wide economic moat. It has a very low beta, which is quite good. PE 17.8, forward PE 17, and 5-year average is 22. Now, based on this, on the 5-year average, this tells me it's actually undervalued at the moment, and in comparison relative to the sector is also undervalued. Okay, price to free cash flow of 30. So in terms of price to free cash flow, it seems a little bit expensive. Looking at the dividends, okay, annual dividends of 2.82. Latest increase was 10%, like we've seen today. 5-year growth rate of 16%. Annually payout, they will give you $88.36. Ex-dividend is basically 8th of March, so it's coming up very soon. And then dividend growth streak of 14 years. So they have increased that dividend for basically 14 years in a row. Payout ratio is only 44% and safety 87%, which is absolutely brilliant. Free cash flow of $10 billion and free cash flow yield of 3.8%. Normally we said we're looking for about 3%. If we can get 5% or more, absolutely amazing. The next thing is the profit margin. So 10% profit margin, operating margins of 15%, and return on equity is not minus. It's basically there's some sort of a negative equity, shareholder equity going on. So for that reason, it's not applicable. And total return is 17.84%. Revenue compound annual growth rate in the last 5 years is about 10% or 9.3%. Current ratio is above 1, so that means the company has enough money to pay off the current liabilities. Looking at the next year and the next basically 5 years in terms of earnings growth, it's about 6% growth this year. Okay, and they're predicting, because obviously the recession might happen and because this is a very cyclical kind of company, people will not go to Home Depot and buy new houses and all of that stuff. They might actually do some sort of renovation. They might go there and just to buy the old things, but they're not going to basically make huge change to their houses or buy new houses, and the building might actually slow down if a recession happens. And I think that's probably what's going on here. The reason why the analysts are expecting a basically lower growth rate for this company is probably a lot to do with that. But if there's no recession or the things are getting better, okay, interest rate come down, basically inflation comes down, hopefully then the recession will obviously go away, and then that this will improve. But for next year, it's about 6%, which is what I can expect from this company. 6%, 5% or more is what I expect from this company. So we will see how things go in the next couple of years. Fair value right now 267 from Simply Wall Street. That means 11% overvalued right now. According to Morningstar, it's 10% premium, so not much of a difference. So 270 is where they said the price should be. Right now it's 297, so closer to $300. Okay, but TipRank is, for some reason, is saying $333, so they're a little bit more bullish. And same things, I think these two companies, TipRank and Seeking Alpha, probably use the same analyst when it comes to finding their prices, the targets, okay, for 1 year. So for that reason, I think they're very similar. So 12% of each upside, and according to Seeking Alpha, is actually a buy right now. Now, looking at Home Depot from business side of things, okay, 99%, just almost 100%. Interest-bearing debt is just 16%, which is really good, because remember, the reason I sold Home Depot was interest-bearing debt was actually getting to the territory, well, about 29%, 30%, right? Right now is 16%, which is really nice. Interest-bearing security is almost non-existent. And as you see here, shares outstanding is actually declining. It's heading the basically right direction, which is really good. And this is one of the reasons why this company has been buying their own shares so much, to the point where they have now negative shareholder equity. So that's one of the reasons. But generally, this company is absolutely amazing. I genuinely think I probably will hold on to this company for at least the next 10 years. But looking at the financial, it seems a little bit overvalued at the moment. So what am I going to do? Okay. Right now, what I'm going to do is I've got my US stock watch list. So I'm going to add Home Depot here. Okay. According to Seeking Morningstar, it was $270 per share. That's the expected the shares to hit, basically, or the fair value, sorry. And I've given myself 5% margin of safety, so that works out $256. So if it starts going down a little bit more and hits the 256 mark, okay, then I'm going to add to basically a bit more to this company. I think even if it gets to 275 or closer to 280, I'm happy to look at it. So I think that will be fair value. So 270, 275, if I can get in there, that will be absolutely perfect. But when you look at my current average, is 287. So that would be really good. The reason I'm up quite a bit, if you think about it, is the FX impact right now. So that's about 8%. That just gives me extra 8%. So I would have been up just about 3% right now on this company. So like I said, it's a solid company. I actually like the company. I'm going to hold on to for a long time. So let me show you a couple of things about the company in terms of revenue and where we think it's heading. So total revenue, let me take out the estimates. You can see it was heading the right directions. And when we look at the revenue in terms of next year, okay, from 157.4 to 157.46. So there's not much of a difference, okay, so just a little bit of growth there. And then the following year it will be 162. So again, that's basically heading the right directions. Now let's change this to annually, and what you will see, take the estimates out, and you can see this has actually been heading the right directions for a long time. And looking at the estimates, is actually they have beaten their estimates. The final thing I want to show you about this company is this. Look at this dividend. Okay, absolutely amazing. They have been increasing this dividend for a very long time. In fact, I want to show you a little bit more than this. The software I'm using is called Seeking Alpha. So if I click dividends and click dividend history, okay, or sorry, dividend growth, if I click that, you can see here, okay, in the last 10 years, basically it's been heading in the right directions. And you can also see how much they have been paying over since 1980s. So it's in 1990 basically is when they started, and since then they have been paying the dividends, but at times they haven't increased it. That's why when it comes to the we said about 14 years of increasing that dividends, I think it was, there we go. So they have increased 14 years in a row, but they obviously have been paying dividends longer than that, which is very important to understand the difference between the two. So yeah, like I said at the beginning, I mean, it's one of those companies that I've had in my portfolio for a long time, and I want to add a bit more. I would love to get to at least the 15, maybe 15 to 20 shares if I can in the next few couple of years, but I'm not gonna rush right now, even though it has come down quite a bit. If it goes below my target price, okay, of 270, then I'm definitely adding more. But if it, even if it, like I said, if it gets to 270 somethings, okay, I wouldn't mind actually adding a bit more to it. And the way things are going right now, general markets, they basically looks like things are not obviously things, the sentiment still hasn't changed. Everyone thinks still there's going to be recession, the Fed is going to increase the interest rates even more. So for those reasons, probably it will come down another, hopefully 5-6%. So we will see, inshallah. Anyway, I want to stop the video right there. There's another video. There's another company I wanted to share with you guys. We haven't spoken about this company for a while. I will be doing this one of videos, inshallah, as much as I can, talk about individual companies that I own that we haven't spoken about in a while. If there's any specific companies that you would like me to look at that in my portfolio or in your own portfolios as well, let me know. I will do that, inshallah, as we go along. Thank you very much for all your support. Have a wonderful day. Assalamu Alaikum.